Well, hello, traders and investors. I'm L.A. Little, and this is your daily Neoclassical TA wrap, a site that's dedicated to teaching you how to fish, not throwing fish at you. If you really want to learn how to trade, if you want to learn how to manage a portfolio, if you want to outperform the markets over time, TA Today is your site. As far as what happened with these markets, let's take a look at the numbers today. It's been a market of perfection. Keeps walking higher, walks higher again today. S&P up 0.6%, Dow almost the same, Nasdaq 0.47, almost 0.5%, 0.75% on the Russell. Gold reverses, finishes flat, as does silver. Oil was up today. And if you go overseas, big moves over there, especially in Germany, as they move this market higher. Dollar also gets a 0.5% move to the top side. If we look at the indexes and see what's happening there, you've got a picture of perfection. When a market is in this kind of mode, folks, you just got to go with it, right? We had, the market speaks to you. And what it said last week, and we talked about this, you had a 2-bar reversal. Actually, it wasn't a 2-bar. We said it was a over-under because it wasn't that extended. Over-under. That should give you the possibility of a sideways to down day. You got the sideways, but you got no down. Today, they just take it higher again. A market on a run, and as it runs higher, you just got to stay with it. And if you're not, then of course you're falling behind, which is what happens in any race against a worthy opponent. If you look at the Nasdaq, look at this run, folks, straight up. I mean, that's a picture of perfection. If you look at the NDX, going to look pretty much the same. It's been a little bit weaker here of late, but still straight up. And if you look at the Russell, remember the Russell was lagging. It led last year at the end of the year. Now it's starting to catch up as well. You got the swing point breakout here. You got it on this time frame as well. That's that red arrow. When you get that, 2 to 3 bars on the longest time frame to the sideways or up. That means weekly, folks, 2 to 3 weeks that this thing should try and move higher. Now, we know that the market does tend to get extended. It gets a little bit jubilant, and everybody wants to get in on it. But, when it's doing this kind of a thing, think about what's happening. Anybody that's not in has to buy up. If you're a mutual fund manager, you can't afford to just sit there and not buy a market that's going higher and higher. If you're managing institutional money, you have that same problem. So you've got performance forcing you to trade as much as you can into your portfolio. In other words, keep as little cash as possible. And if you're on the other side of this and you're trying to short this market, you're just slowly being squeezed and squeezed and squeezed out of your positions. That dynamic is what can get markets like this going higher and just keep going higher. If you look overseas, you got the same sort of thing starting to take place over there. I want to point out the DAX to start with. In Germany, the big market in Europe breaks out over a swing point high, starts to do another extension to the top side after a consolidation round here. If you look at it on the weekly, you got the same thing, right? Starting to leg up one more time. And if you pull it over on a monthly to get a perspective, you're going after the highs. You got the highs up there at about 11.92, and you're trading it at 11.967. So, 12.390, and you're trading at 11.967. So, you're working your way up to the top, working your way back, baby. If we look elsewhere, I didn't see anything else that really jumped out at me, but all through Europe, you've got strength. Whether you're looking there, you're looking at Switzerland, which is also breaking higher. Or you go to France, where you've got the elections coming up. What do? They're trading up there at the highs. They're not giving it up either. It doesn't matter where you look, folks, whether it's domestic, where you're looking overseas. It just simply doesn't matter. At this point in time, these markets, be it fundamental or not, be it real or not, these markets are working higher. And as long as they do that, you simply got to stay in the game. That's the way it's played. And unless you do, you're going to fall behind and farther behind. And pretty soon you're going to be taking bigger risk than you want to. I don't see anything to tell you that's bad here. I can't find anything on my charts that looks bad. If I go look at the sectors, they look the same. And let me just point one out to you, the socks. You know, we talked about, hey, this thing's pretty extended. Well, what happens? It gets even more extended today. Takes a little 1 week rest, and it's back off to the races again today. And you're seeing that everywhere you look. I thought technology would take a break. It has slowed down slightly, but I don't know if that's a break. That looks to me like 3 weeks of up without anything in between. That's the way it looks from here. What do you do with a market like this? You just stay with it. You can't outrun it unless you've got some really good stock picks, but you just have to stay up with it. And when it starts to retrace, when it starts to come back, that's when you make your extra beta back up on a market like this. So that's it for tonight. I'll leave it at that. I'll see you next time. Good night.